Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. It is Saturday the 21st. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are you, Barrie?
I'm doing pretty well.
Another good week in the books.
Pretty good week. Yep.
The review this week for me was a lot of things look to be at turning points, and we're going to see we're going to talk about it and see what the evidence says and go from there. One thing that I don't think is at a turning point is Bitcoin yet. We continued to see the weakness, right? We got that plunge last week. Didn't quite make it down to the full square, but we didn't get a huge rebound. We've just been sort of making this little small triangle, and I was look at where the apex of that triangle is.
Mm-hmm.
Right along all those previous lows, which is not exactly bullish. If this thing can't get up off the ground soon, odds favor we're heading lower. The full square is around 24.6, call it.
And where's that half square?
And then the half square is at about 15.8, 15.750.
I bet you there's some ABCDs that are going to end around that 15.
Yep, we're heading that way.
Mm-hmm.
Also, on our timing count, the 69-day cycle here says we still have some more to go. I think it's around June 6th, June 7th.
Mm-hmm.
So, unless something changes dramatically in the price action, meaning we, break this downtrend line or get above this half square, which is around 33.5, call it. The weight of the evidence says lower in Bitcoin. What else do you have to add to the chart here?
You said lower in Bitcoin. Well, I'm with that. Well, I mean, that pattern's bearish, at least for the next week. It looks bearish. And I think the fact that we didn't hit that full square probably means we're going to go lower, maybe another 8. They're probably, and if we get beyond that, we're going to probably go to the half. So that's, instead of just pussyfooting around with this, it just looks bad, and it looks about like at least another full square down. So, I mean, a half square down. So that 15 area looks good. Mm-hmm. And well, let's stay focused. And to the upside, it's very clear. If we take out the half square, all right, fine. Maybe we have something temporary
to work with. Yeah.
Well, even then, you still got 2 other really heavy duty trend lines above that. So,
yeah,
so from the November high to the April high trend line, and then we have this shorter, steeper one.
Yeah. Yep.
Yeah. So everything it looks heavy.
Agreed. Let me flip it over to you, and we can go over the big 5 and see what this week's volatility brought us. Man, they rallied that right to your number at the end of the day, didn't they?
You mean over here?
Yeah.
Yeah.
At 38.96.
Well, more than that, beginning of the week, it rallied right into 40.75 and couldn't really get above that.
Do anything with it. Yeah.
Yeah. That was the key. We were looking for some kind of actually, that was the only number we left with last week to see if we can get above that or not. And well, it was a not. And the resulting move was fairly quick, right? Went right down into, and the 38.96 was more of a target zone, right? We're going to get in there, and we certainly got in there. So looking forward to, go ahead. Were you going to say something?
Yeah, I was going to say, it's another great example of the checking back after you lose one of these full squares with the 90 here.
Yeah.
We lost it, checked back, and then it gave it up hard.
Yeah. I mean, this is textbook, right?
Mm-hmm.
Exactly how it should happen. And the other clue for people that are sort of following along, was this square here. We did this 90 by 90, which is just about perfect. And if we lose that, it's really bad.
Right.
Now, we rallied up a couple of days and came slammed back down. Okay, if we held it and rallied again, all right, fine. We could have a low in place. But the fact that we couldn't hold it, I think I said it when it happened, we're in a whole nother cycle now, and it's really weak. And we saw that playing out last week once we failed pretty much the same price level as a 90-degree line. So these are all good lessons, and this is how it pans out. So looking at next week, let's see, since we're doing week at a time. And if you guys are first time seeing the show, go back a couple of 3, 4, or as many as it takes, and roll forward so you can see how we thread the story going forward, and it's easier to follow, and you'll understand all these other points that we covered in the past. And because every new show we're just kind of going from where we are, but if you go back, you can see how we mapped it out to where we are. And that said, if you like the work, please feel free to click the likes and share with friends that might find it useful. Right, Ben?
Absolutely. We appreciate the likes and the shares for sure.
It would help, if we can grow the channel to a decent size, and we can get somebody to do the stuff, upload and edit and all that.
Sure.
And we, giving us time to do other things. So our whole Saturday doesn't end up with the podcast.
Right.
And neither one of us like doing that. So
hey, look at your that April high. If we go to June or late May, early June, it looks like we'll do a 45 down time wise, huh?
Right. Yeah, we would. Yeah, that would be right there. Yeah.
Right.
So that's possible. I know you're looking at that.
Mm-hmm.
So getting back to the chart, let's see. There's a lot going on here. And I think the 3896, that's enough of that. That was really more of a zone, a target area to reach, not a heavy support level. But 3850 so 3850, we're going to use that as
new support.
Well, it's next week. It's interesting because, well, let me just show you guys this. I track a few different, things, not at once, a few different ways of tracking the market. And I've been watching this fork here. I like to work with line work. And so I've been watching this, and the way I set it up was just basically high to high, up here. And you can see how we came right to the low.
Off the COVID low.
Off the COVID low, and it's a little bit off, but we're in the neighborhood, right? Yeah. Right in there, right?
Mm-hmm.
And actually, I need to adjust it. If I adjust that a little bit, it's right in there. Okay, It's close enough.
Right. No, it's good
so,
fit.
And normally the geometry works, and this one has been working, like from looking at the reaction here and the reaction here.
You get it at every stop.
Yeah.
You're getting reaction.
So it's been fairly good. Like it caught the low here. So basically, we matched that move, right? We matched it in terms of geometry, and so I saw that, and I was wondering, well, did we have any squares or anything else to support that? And we did 3/8 down on the new square, which is fair. It's okay. That could give us some kind of support. But the reason I put in 3850 was, if we're going to go higher, if what we talked about on the square on the fork is decent support, and although we're not exactly squaring out here, there's enough support for a bounce, let's say. And if that's the case, any kind of a pullback early next week should hold above 3850. So that's the key with 3850. Okay.
Mm-hmm.
Let's get rolling on this. So any pullback should hold above 3850. And until we get above 3945, let's say, until we get above 3945, which is very close to Friday's high, market is still weak. All right. So in between 3850 and 3945, roughly 3950, you can call it. So this area could be some kind of a consolidation like we've done in the past, like over here, or over here, or over here. We have plenty of examples of how we can get this range bound kind of consolidation at a low. So we got 3 of them right there. So this could be one of those between these levels. But the reason you want to watch them is, if we can see 3850 holding on, let's say 4-hour pullbacks, or any kind of a shorter time frame, that'll be, I'm going to be looking at that as the first sort of the clue that, okay, there is some support here, enough to sort of validate a bounce. And if we can sort of manage to hold above 39.45, then I think we have a fair shot at 40.75. And of course, 40.75 has been tested a few times, so it's not going to be the sort of the end all, the only point we're going to play with. So I think if we can clear 39.45, then 41.70 area is really the next resistance. Okay. So we got three numbers for next week. We want to see if this is a low, we have good support here. We did go, 3/8 down on the new square, which is decent. If that's the case, we want to see pullbacks hold above 38.50 or wait till they do hold about 38.50 to confirm that. And above 39.45 is a gathering steam. And if we can really hold above that on pullbacks, then I think 41.70 is within reach. Yeah, 40.75 is still there, sort of keep it in the background because we've been working with that for almost half a year. So we're going to shift up into 41.70, which is 7/8 of the first square, right? That's what we're looking at. And the reverse of that would be we can't hold above 39.45 and we start slipping below 38.50. If that's the case, we're going to straight down to 3700 area. All right. So that's sort of the game plan.
Yeah, it looks good. I've got a couple things to go over on that as well when you flip it back to me, because I found some interesting time relationships there.
Okay, good. Yeah, there are some time relationships. Well, you picked up on this end of June, but if you take an ABCD like you did on your, I think it was a NASDAQ chart.
Mm-hmm. We completed.
It's fairly equal time,
Yep.
The time that both of these legs are fairly equal. So,
yep.
So there could be something there.
I definitely have evidence of a bottom here, which we'll run through.
All right. And if we look at the weekly, yes. So we had that 38.96 and, it's a quarter of the square of 72, that area right there was sort of the support area, and that's kind of where these trend lines cross. So that was definitely a zone that was showing up. It's also 1.5, let's just say, rectangles down. These are the ones we were using, I don't know, a few months ago to measure these moves. So we're doing 1.5, and I'm guessing we're probably going to do 2. So that would be 35.70 at some point if by the time this whole story is done. is my guess. In the meantime, so we did get down to a quarter, and on the weekly, these quarter levels are pretty important. So it's possible that we get a bounce. I mean, we've been down 7 weeks, and I think 7, 9, 11 weeks. So, a week bounce or even a little bit more might be in order.
Mm-hmm.
And the weekly square, 216 degrees up from the 2009 low, ends up being about 41.50, and we had 41.70 using the other square. So that's kind of the next big resistance if we can mount some kind of a rally out here. Yeah, I don't know. I don't think I have anything else to add to that. You have anything else on the weekly? Well, you're going to cover it, right?
I'm going to cover some, so we'll talk about it shortly.
Yeah, so that's it. We can leave that. And looking at the bonds, well, we left it off last week. Well, we dropped this box. We're calling that sort of a support zone. And we were looking for it to come down to 216 and find some support. And we did come down to 216 area. Yeah, we overshot by a little bit, but a quick recovery. But generally, I think last few weeks, we were talking about this 140 being sort of a key level, and we were expecting price to sort of rotate around that and sort of revert towards 140. And it did that. And the first pullback off that low held above the square. So that's a sign of strength. And of course, it was within the zone. And now we had 1 day up, and Friday was inside of the good, strong close. So I'm expecting it to at least probably do an ABCD up. And from there, we can see if it's strong enough to go any higher. So the ABCD target would be 144.
Mm-hmm.
And if we take that out, I mean, I would really like to see it get to 146.5 or so. I think that's a half square going up. That'll be good. but it doesn't have to. These ABCDs can work out quite nicely. And if you put the square to the bottom, you can see half square is pretty much right at that ABCD level. See that?
Mm-hmm.
So that could be the number to watch and see what bonds will do there. So it's a key level, all right? So 144 key level to watch for retest. And that would probably, that would kind of do a false break above these two highs. And so we'll see what happens. I'm looking for at least for the bonds to go test that and finish out that ABCD. Looking at the weekly bonds, well, we had the 141 and we were talking about the 140 level right there. That's on the chart. Again, we were expecting it to hold in this zone, 140, 141, and it did. And now we're rallying off of that. Everything looks okay. It looks like a normal counter trend in a down market. So we'll just go back to the daily, look to see if we can get up to 140 or 144.
144, yeah. Yep.
That's the deal for next week. And if we can hold above 140, that's great. Ideally we want to hold above that, and the bonds are in decent shape above 140 and looking for 140, 144. Because of the ABCD going into that, looking for that area to be resistance also. If we somehow get above it, then, it might be a more drawn out affair here. But for now, 144 is the number. Looking at crude, well, the higher highs, higher lows are playing out. In aces, there is just perfect.
Mm-hmm.
We did dip below 90 a little bit. All right, fine. Considering the times we're living in, this is more than fine. So,
yeah.
And we in total, in net, we've managed to get above 90. So long as we're talking 110 now. Remember, when 97 was a big deal, and now the pullback lows are holding, 105. So it's clearly making higher highs and higher lows. So long as that's going on, we're expecting higher prices, and I'm still waiting for it to really clear the square, right? We're kind of grinding through it. It's not a clear, quick move. Of course, it's a huge market, so let it grind through. When you guys start seeing pullbacks holding above 90, let's just say above 107, then we're heading a lot higher. So for now, let it grind, but you can watch the lows making higher lows. It's definitely in a clear uptrend. Next, we're going to look at the weekly crude. Again, if you guys go back and check the other episodes from the past, this 90 was a key target we were watching all of last couple of years. And we shot above it, came back to retest the 90, and now we're moving off of it. Again, very strong price action. So this is all bull market price action, and I would trade it that way.
Mm-hmm.
Next in line would be gold, the one that's been a little bit soft lately.
Mm-hmm.
And last couple of weeks, we've been bullish because all of these lows, we know it's bullish long term. So we're treating these as correction within a much larger cycle. And we'll take this out because it, after about a year, I think this is done. And what I wanted to talk about is once we got this high in place, the reason, Ben, last week I was like, hey, we got to get some gold.
There you go.
Is we did correct 72 degrees perfectly down to the square, and we rallied off of it, pulled back, and now we're moving. So the idea now is, as long as we're above that square 72, which is right around 1789, it's firm, right? It's on firm ground, and every time we take out a quarter level, so the next quarter would be, let's say, 1861. It's just getting stronger and stronger. So I'm looking for higher lows and higher highs, and knowing the way gold trades, it might not be clean higher highs and higher lows. It might be, impulses and consolidations, impulses. But generally, we're looking for at least a test of the 1887 area.
Mm-hmm.
But firm above this 1790, at least where the square is. Taking a look at the weekly gold. Last week we saw it come down and touch the upper triangle line that was set up. I think this has been here for a year at least. And so that sort of provides support. We came down under a little bit and flipped around. So clearly, if this is going to hold, next resistance we're looking at is around 1880, 1881. So that's sort of the block to clear for the next leg, right? So yeah, this could be a low, but then how do we determine the next trend? So we're looking for 1881 as resistance. And if we can clear the zone, get back above this box, then I think we have the next shot, next leg up into clearly beyond 2100. So 1881 is a level to watch. And we have support in the pattern, the geometry. I mean, it came back right to the middle of this entire consolidation, right? See that? So they're all kind of performing okay. There's no issue. And this basically came down 72 degrees, which is normal. So everything's kind of okay. Now we're watching for it to trade higher, knowing where the support is. Are you covering gold this week?
Yeah. Gold and crude and silver. They're all looking, and copper too. They're all looking good for a trade.
So looking at dollar, well, I wanted to look at the weekly dollar first because I saw something. Yeah. I'm looking at this, it looks so much like sort of a blow off move, and I'm looking for some evidence. And while I was looking for timing, but I saw this price. We were looking
for pretty good
dollar going into 110, 115 up into this area. But of course, way before that, we have a 270 degree leg up here move, which we didn't get the last couple of times. We ran up at it. This time we did, and we backed off. So this is clearly resistance. There's no question about it. But I really don't have. I looked. I didn't have anything huge timing wise. So I think the dollar is still strong, and I think it's probably going to at least go and test this and maybe go up into the 106. If we do that, we're slowly clearing that level on the 270, and if we can clear that level, basically, if we can clear this high, we're opening up the dollar into 114, 115 area in the next couple of months. So that's the thing to watch here. So I don't see a lot of weakness here. I just think it's a normal correction, counter trend. And going back to the daily, the 90 degree level was around 100, 101. And last week, I think I said, long as, we have to hold above this 103 to be in a firm, good, strong position, and corrections holding above that would keep the dollar very strong. And the fact that we got a little bit below it means, it's correcting. Okay, clearly it's in a correction mode. Maybe it's not as strong as it was up during this very strong impulse. So it might take a little breather here and then try to retest this 105, 107 area. So we'll have to wait and see. But we do have some time coming up. From the low in 2021, we have 360 coming up by the end of the month. So it's possible we rally right up into that at the end of the month, and that will be something to see. And I'm watching, we have to watch it fairly pretty close, because we did have a 90, low to low 90, and then low to high would be close to a 270. So it's coming up. It's not, we don't already have it in place, but there could be a turning point for the dollar coming up. But we have to watch it, because if it breaks a certain next couple of key levels, then we open up another at least 5 points, not five, about 10 points. So
right,
kind of a big deal.
What's interesting is you were going over your big five, and I was doing my chart review this morning. The same theme is coming up, which is the big move, the big trends are all looking like they're pausing, and there are counter trends taking place within those big moves in a lot of markets.
Right.
They're setting up. So, I don't know what the fundamental reason is or what the excuse is going to be, but that's what the price action is saying.
So there's a little bit of a change, a breather, right?
Yeah, exactly. Yep.
So we'll watch it. I mean, the trend line is very steep. If we hold that, leads me to believe we're definitely going to do some kind of a blow off. So we got to watch it closely. It's very strong. So I wouldn't be shorting it just yet. All right. Let's look at the euro. One of the easiest charts this year.
So nice how it responds to the geometry.
So last week or last few weeks, a couple of weeks, we've talked about this 105, 106 area being resistance because of the 180 degrees down. We're 2 squares down, square 90. And that's the area to test and get above or not. So far it's been a not. And, so that counter trend sort of matched the pullback in the dollar. And so we'll have to see next week. Again, as long as we're below this level, 106, you have to consider euro to be weak. And unless we can get about 106 and sort of establish a level above that, until then it's weak. And it looks to me like, at least we should get to the half square. It would be kind of odd to finish up here, although it's a quarter square. It could, but seems like parity might be interesting, but
yeah, ultimately that's the trend.
So it looks it still looks weak, and the only time we would double check on that would be if we can take out this 106 weekly euro, which is coming up on that 72 week timing mark. And look at the big difference, right? Look how much it would have to rally to challenge the 72 the weekly resistance. And we're just here. And we're coming into 72 weeks. So it's possible we have something of a little bit of a change in behavior. So that's why we have to watch those daily levels very closely. Yeah, that's all I have for the euro. It's still weak. And we talked about the levels to watch on the daily, which would be the 106. Yeah.
Exactly.
That's it. Let me wrap it up and throw it back to you, cover the commodities and NASDAQ and everything else. And back to the ES.
Exactly. Before, the reason being, before we jumped into NQs and then all the commodities, I wanted to show you some of the time relationships that are coming up for me on the ES daily. This is the ES daily that make me think we may have seen a bottom on Friday. Notwithstanding the fact that, ES always likes to push it. Maybe we get one more push down and clean everything out and then we go. But somehow I think we're hammering out a bottom here, not the bottom, but a bottom to support some sort of rally similar to this or this, this kind of price action that we've seen on the way down. So first thing I noticed was we did a clean, almost perfect ABCD of, as usual, pushing it over a little bit, but you got these sort of equal moments in time, as Barrie was referring to, that give us the components of the ABC along with the price. We also pushed below this half square here at 38, call it 38.85, and we pushed below there a few times, but no bar closed down below here. So clearly this is an interesting area and an important area. We've closed, around 3,900. The other thing on these time counts that I thought was really interesting is low to low, as we were making the high, we did 58, and then low to low here from that spot is another 58. So that equal distance in time from here to here, here to here. The other thing we did was high to low 37, high to low 37. So that, along with the ABC, along with the big bounce on Friday, has me thinking that we may have found a tradable low for another bear market rally here. All within the overall larger picture, which again is not a in opposite to what you were saying either, Barry, how there were some things there. And if we held certain levels, yeah, you could see a rally.
Right.
But this was kind of interesting to me. Let's go to the NQs now. And we see something similar here. Taking it from the lower high that we made late December, late 2021, a nice ABCD down. Found support, the low found support on the full square here, in that 11.5 area. Nice bounce off of that. So again, as long as that low holds, and I like the strong move at the end of the day. It with all these different things coming in, the square, the ABC, the time counts here are a little interesting too. If we go high to low on this move, it was 47. You go low to low on this move was 47. You go low to high on this move was 36. And here you go high to low was 36. So there's some symmetry in the time. We found a low on the full square. Obviously, until we get above this half square, which is around, call it 12,150, it's in a weak position. But if we can get above that, again, I think it's setting up for another one of these sort of bear market rallies that we've seen throughout this downtrend. I do like that, we bounced pretty hard off that full square. What are your thoughts about the NQ?
Yeah, I feel the same. We were looking for Friday's high to be taken out to sort of confirm that. And your half square is pretty much close to, Friday highs for the NASDAQ NQ. So we're about the same. We'll see what kind of a counter trend we get off of that. If any, like if the half square can't be taken out for Monday, Tuesday, then probably longer consolidation or maybe a dip lower. But if we take that out, then I think that sets up the momentum to the upside.
Now, would I be surprised if we didn't undercut the lows and do some sort of false break or some other shenanigans? Absolutely not. That would not be surprising. It's just that move into the low and the reaction out of it, and then these other time relationships really have me thinking that we may have put in a tradable low there. All right, let's go to the next one. All right, so here's the 30-year. Barrie did a good review of the 30-year. I wanted to show the chart because I'm having sort of similar feelings here that within this overall move lower, we're getting a counter trend, and I think we just did the NQs and the ES, and those again were showing that we could potentially be setting up for a counter trend move, and that's the theme that I'm seeing this week in certain commodities that are reversing, the NQs, and in this case, bonds. A simple ABC up, as he said, takes us to 144. The other thing I'll show you is that this full square at about 142.5 is really key, right? If we can get above that and sit on it, we should at least do 144, and then potentially, up to like 145, 146. If it really wants to get going on a weekly and a monthly basis, you're talking about 147 is resistance, which would be up in here. That would be a really big move. I think here is the realistic target, that 144, and we know we got to get above the full square, call it 142.5, to really have any chance of upside here. But this looks decent. It looks like a decent setup for a counter trend trade. Just you obviously know where your risk is because the bigger trend, is down. Gold, another one that Barrie covered, but I wanted to show my view on it here. ABCD down completed, right on the full square here. Had a little move up, broke this steepest downtrend line there is. I think gold, along with the other metals, look like they're ready to do some move against this prevailing trend that's been in place since early March. So I like gold to the upside. multiple reasons, but the ABC down, breaking the downtrend line, holding the full square. The next key level for me is like this 1880 area, which I think corresponds with your, one of your key levels is 1880. So we're on the same page here. If we can get above that, then if we can deal with this downtrend line and then attack the full square, around 1970, 1980 would be the next spot. But gold, bigger picture, looks good long term. We were just, sort of dealing with this correction that we've had, and it looks like it ended here. We know where we would be wrong, right? If we get stuck below this, call it 1788 level, I'd say we're in trouble. That would be the first sign of trouble, is gold there. Anything else to add on gold?
No, we're good.
Okay. Next is silver. Silver's a little behind gold in terms of the pattern, but I do like the pattern. It's very similar. We did this sharp move down. We found support on the half square. We've broken the steep downtrend line that we were, stuck under since mid-April.
Right.
And now we're climbing. Actually had a little pullback here and now made higher highs after that pullback. So we could see a decent move at least to the full square, which is around 2266. Settle above that, and you open up the half square at about 24 and a half, 2460 area. I like the way silver was acting end of the week. It actually led gold out of the hole, and then gold, took it over. But this was the key point where we, held the half square and turned higher. So watching silver, looking for entries where your risk reward is good, it appears that it's ready to make a move higher here. What are your thoughts on silver?
Well, it's definitely moving higher. I think it lags a little bit to gold, but well, it's cheap.
Yes, yeah. Poor man's gold. Let's go take a look at another one, another of the metals. Copper's one that's been off the radar for a while, and you can see why. It's been in a big, wide range chop. We made this, false break, spike high right at a half square, and then we sold off. Well, look where the sell-off came down to. We came down to this half square. Could draw this trend line in now because we reversed, and now we're heading up to challenge this full square. This is the key spot here to see whether or not we're going to have a decent trade in exactly. Copper.
Yep.
This 433, 435 area, we get above that and sit there. Theoretically, if we're stuck in this channel and we're just moving from the top of the channel to the bottom of the channel, you got a target up here. I mean, let's say we don't even get to the full channel. Let's say we just get up to this half square. You're talking about over $5 there. So this again is a setup, and we're looking to see if we actually get the price action that that supports it, which is get on top and sit on top of this this full square in this, call it 434, 435 area. But I noticed this super wide channel, and I said, wow, this thing's setting up. If you look at the 4 hour is set up even more bullish than this. The daily will usually follow as long as we get follow through. So I like copper for a trade, provided that we get above that full square. Any other comments you have here on copper?
Well, just that we're waiting for the correction to end, and it looks like this is a possible level, and getting above the square would be the key.
The other thing I was looking at is look where the low came in. Right in the middle of that, the consolidation off that previous high.
Yeah.
So it's a good spot structurally for it to stop, and it did. And
yeah, it's good.
Now we'll see if we get some momentum.
I mean, a lot of buying came in right off of that. Look at that. How many days?
Yeah. There's a good full week of buying there.
Yep.
And they even had a 1 day pullback and then shot right back up, made a new high next day. So that's a sign of strength. So copper, could set up for a decent trade here. Here's one we've been talking about all year. Barrie covered it. Still one of my one of the favorite charts I'm looking at in the commodities, and that's crude. Key thing, I won't belabor the point because Barrie covered it pretty well, is that, this series of higher lows, we just had another one come in on, on some weakness when it pulled back with the market selling off. For me, the full square, call it 104, 104 and a half area. We're now sitting on top of that. This would be the first bar, above that, after tapping it and then going a little below. The next big spot on the daily, it's 115. On the monthly and the weekly, there's resistance in the 114 area. So that 114, 115, we clear that, then new all-time highs are probably coming on this run. Mid-teens is really critical right now. On the downside, holding this to be super bullish, holding this 104 level is really important to see if we can't break this thing out. I know you covered crude, Barrie. Anything else to add on this one?
Well, we're watching that triangle. It's starting to grind higher, breaking through it. Looks good. Played alongside.
Absolutely.
Mm-hmm.
All right, let's jump and look at some softs. Here's sugar. This is one we highlighted last week. Had a beautiful move coming out of the lows here on the full square. And notice how it just pushed it a little bit further, on those 2 days before it took off. You see that kind of price action all the time, right? Because you had a low here and you had a low here, and it just came down, cleaned out some stops, and then they launch it. What we've done this week was encouraging for the bullish case, is that we pushed above the half square and we've come back and we tested it. Basically 3 different days we tested it and it held like a rock.
Mm-hmm.
So this week I'm looking to see, hopefully we can get that push to where we can actually break through this quadruple top here, in the 2050 area. Because if we do, this thing can run, because you got essentially a base of almost a year where we've been, banging around in this full square. A little bit of deviation here, but mostly price action has been in this full square, from 18 and a half to 20 and a half. So breaking out, sitting on top, that's the launching pad. I think it's a matter of when here, provided we hold these levels, it's just a matter of when it's going to happen. So I really like sugar and hope in the next week or so we can get that big move up. Anything to add on sugar?
No, we're good. It's looking good.
Yeah. The other one, the last one I'll cover, is another soft. Coffee looked like it was going to go this week when we made this move up. Started pushing really hard, but it just wasn't ready yet. Has pulled back. The key here is we're getting bars that are holding above the full square. It's this 212 area on the daily that is really, really critical. Again, a lot like sugar, we had lows here. It pushed down for 3 or 4 days, took out those lows, and now has reversed back up. What we're looking to see is it hold the 210 level, and then the next test is to get above this and hold this 231.
Mm-hmm.
We hold that, then it looks like we can launch to new all-time highs here in coffee. The other thing to notice, I've talked about this before, is we're holding above the highs from last summer and fall, which were in that, 212, 210, 215 area. As long as we can hold those, it gives us a base, on which to push higher in coffee. On a monthly basis, there's weekly and monthly support in that 210 area. So, again, anywhere in this vicinity of this full square, it's critical to hold. We lose that, then you got to say, okay, we're wrong. Something else is happening. Let's,
longer consolidation. So.
Yeah, let's reassess, when it sets up again. But right now, this is a normal pullback off this thrust. If we hold here, we have a higher low, and we sit on top of the full square. So the bullish setup's there. Anything to add on this one?
Just waiting for the next leg.
Okay, that's it for me on the commodity side.
Mm-hmm.
Again, the key theme that sort of spoke to me as I was reviewing all the commodities and the risk markets and bonds, and it's that we're at some sort of a turn where the major big picture trends are going to sort of pause, and we're going to see counter trends of some kind. In equities and bonds, the major trend has been down, and they're moving higher. In these commodities that have been correcting for months or a year, it's looking like we're going to see they're going to stop, the corrections are going to end, the consolidations are going to end, and we can see a move higher. And we tried to cover the ones today that are in a position where odds favor that happening. Right. What's your theme heading into this week, Barry?
Well, it'll probably be like last week. Take your profits quickly.
Right. All year, right? That's been the theme.
All year, because we're sort of consolidating. It's really volatile, so you really have to watch your trading and where things are going. Mainly, I'm watching the bonds because we're waiting. It's starting to move towards that target. A, B, C, D. Counter trends are usually pretty good trades when they work out. So watching that, and also watching to see if the the stock market, the S&P, can hold these lows and get a bounce up into above 39.50, so we can maybe test a little higher. We'll see.
It's going to be an interesting week.
Yes.
So good show, Barry. Thanks for all you do, and we'll talk soon.
Thanks, Ben. Good job. Everybody have a good week.
Have a great week.